Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Let's see what we can catch up in these markets real quick. All right, so I'm not feeling these markets today. I'm gonna just be straight up with y'all. This is Euro GBP. Remember, I know, shout out to y'all who caught the Euro GBP trade with me last week. That thing went about 40 pips, I think, with two positions. So, and the two positions was this here, first one, and then you had to pull back, but then this other arrow came up. I took another position and ran up. I didn't take a position off of this one, only because I'm always wary about second arrows, arrow alerts. But this is not a second arrow alert because you had this down one here interrupting. So that's why I took it. So two positions, 40 pips. That was 80 pip trade. I was happy. And then it got stopped and it pulled back and then it went up again. I actually took another trade again. I think this ran up about maybe another 20 pips. I'm like actually very bullish on Euro GBP. Yeah, it went about 20 pips and then I dipped. I'm bullish on Euro GBP right now, even though it's on an overall downtrend. You got to remember when that thing first started pushing up, these support zones weren't there. I saw that it was coming off of a weekly zone. So I said, oh, you got plenty of, you collected a lot of money pretty much and you going up. So that's how I ran it up. That's one way. And you could look at the call last week to see further information on why I took that, even though it was against trend. So that's why Euro GBP was on there. I'm kind of still bullish on it. This is what I was talking about, that weekly zone that it was just sitting on and it was pushing off. And if you zoom in, I'm still bullish because it ain't even come out the zone yet, you know? So this is the current week. It ain't even come out the zone yet. So I'm going to be bullish on Euro GBP for quite a while. So that's that. That's why I'm taking up arrows on Euro GBP, even though technically on the H1, it's an overall downtrend. So I'll just leave that there and I'll just get off this chart. Let me see. Now, this is S&P. Let's take a look at S&P. I'm not feeling it when I turned on my chart computer this morning and I seen this chart. I said, oh, you is not trying to be my friend today. Not at all. Especially since I was in a trade last night. So I was in a trade around here. Right? I was in a trade around here because I'm still bullish on the indices too. You know, US indices. I'm still bullish on them too. Only because we still in the overall uptrend. You know what I'm saying? Anything that's pushing back down, it's a pullback. I'm not sure. I can't predict the market, number one, but I'm not sure if it's actually going to come down enough to like start a complete downtrend. Something catastrophic has to happen to our economy to make something like that happen, you know? So I'm still overall bullish. So I'm looking at any pullbacks or retracements, any downward movement as a retracement. So I'm still overall bullish. You crack me up. Hey, Daniela, the raw sugar. I love it. I don't know if I told y'all that the broker that I trade that lets me trade raw sugar is LMFX. That's the only broker I could find that I like the commissions and that I can rock with that lets me trade raw sugar. So it's funny because you'll never see like no other trade in that account except for raw sugar. It's funny. I don't know why. It's just sometimes charts just gotta speak to me. And when I mean speak to me, like I gotta understand how the asset is moving. Like it gotta be something that I could follow, which is why gold is a hard thing for me. I can't necessarily follow gold's movement. Everybody's a different trader. Other people, gold is like easy for them. For me, it's not. So that's why you'll hardly ever see me on gold unless it's like something clear, blatant, 15 confluences on the chart type thing. But anyway, let me look at this. I am overall bullish on the indices, but today I looked at the H1 and this just got me hot. This just not making me feel good at all. And what I mean is, number one, this pullback was happening, and at first I was mad because I got in here. So let's not sleep on the H1 alerts. I keep telling y'all, S&P gave you an H1 alert. Get in here, ride it up. It rode up for, I'm always coming in right here because of spread. It rode up for like 90 pips, almost 100 pips. And I only need like 75 minimum for the week, right? And then 250 for as a really nice one. And then the goal, of course, is 750 if you want to try and cover your AIRO subscription if you're running with like a 0.01. Now, this week, am I going to catch 750? I don't know. I have to see. But don't sleep on these H1 AIRO alerts. This is Monday. All right. Then what happened? Boy, this drop. This drop occurred, and one of my good friends, Deanna, reminded me because S&P made a new high. It broke a new high. It has never been this high before. So this is Monday. It made a new all-time high, and then it dropped. Usually when that happens, after you make an all-time high, it's going to drop. So that's exactly what it did. Okay. I forgot about that. So I was still looking for buys and that thing was dropping. I said, oh man, so I missed majority of this move yesterday. But then it stopped and then it started pushing back up. So I got in on the move with the push up. So I got in and it pulled back on me and then it pushed up some more. It only went like 100 pips, I think, even from here to here maybe. And then it pushed down again. Because this thing stalled and didn't continue going up, because I was thinking it was coming back up here again, I'm like, okay, you guys are playing and we might have some zones start to create on the H1. So that's why I'm kind of like, I don't really like this week on S&P. After this massive drop, I would have anticipated a big push up, which it might still do, but not right now while we on the call maybe. All right, I mean, it's pushing now. So let me go see on the M5 what we looking at. Got a nice little impulse. See, AIRO MA has crossed this 200. I'm not really, so I got downward pressure right now. If this thing gives this impulse, comes up and kind of wicks out at the AIRO MA, I'm looking for it to push back down. So at this hour, not really feeling S&P right now. Just not feeling it. I think it's going to probably have more defined movement around market open, and I'm talking about New York market open, 9:30 Eastern, especially when the previous daily candle was bearish engulfing, but it wicked out, so it wasn't like a full. So it's just something to kind of pay attention to. I mean, we might be bullish right now, but this thing could totally turn around and turn bearish. So, and because I'm not getting a lot of movement today, I'm not really feeling it. So we'll see what happens. So that's S&P for right now. Especially look at this down arrow on S&P and then look at the pullback. I don't like that setup either. It makes me feel like I feel like it's setting people up because like remember the arrow alerts are signifying momentum. All right, it's signifying momentum and stuff like that. So with this momentum, you telling me we going down, but then you immediately turn around and push back up. I feel like you're trying to trick somebody. So I'd rather just sit and wait for an actual quality setup. So what's my quality setup that I'm looking for on S&P? I'm going to be on the H1, okay? This green line right here, I'm going to be looking at it for the money zone. It's really interesting. When I'm on the H1, the money zone is right here at the top. And here's the bottom. See, I was like right in the middle. So I don't know. I'm not really anticipating a money zone breakout today. However, if you go down to like the M15, see how it's a little off right here? So it might be just the view of the time frame, but I want to tighten it up on the M15. So it's like right smack in the middle between the high and the low yesterday in the money zone. So what I want to do is just kind of mark those off because I'm not sure which way we're going today. All right, mark those off. And then I'm going to mark off the high and low of Asian session. Okay. That. And I go to the wicks. I know there was like some debate on the wicks and the body. I go to the wicks. Wicks are important. Wicks don't lie. That's all I said. Pay attention to the wicks, especially when you start seeing what? Wicks that come out of nowhere. Wicks are rejections. Rejections off of a zone is powerful. Pay attention to the wicks, candlestick formation, right? So, matter of fact, look at this right here. See, you got that nice little wick and then S&P push up right here on the M5. That's what's irritating. On M15, that's what's really irritating. But anyway, I'm going to be looking for some breakouts this way. So I'm going to be looking for a breakout to the downside below Asian or to the upside above Asian. If it breaks out above the high of Asia, you got that 200 line running right through. That will be more to your benefit that we're going up. Okay, so that's what I'm kind of looking for. And I just mark them off. And then what I do is I set alerts. And I showed y'all price alerts. You right click on the chart, click on trading, go to alert. It'll drop this little arrow here so that when price gets there, it'll alert you and start ringing and stuff. You can update it by just double clicking where it says alert bid, sound, S&P. I always do it for like 30 seconds each. I always do it for like 50 iterations so I can hear it. I'm looking for the bid price to be above that 44.69 or whatever. Then I just kind of tell me it'll be above that, but I marked off 44.68. So let me just put it like that. Make it nice and even. Okay, and hit okay. And then it'll alert. And if it, see how I just move right on there? And it'll alert me up there. And I'm going to do that for every horizontal line. So I don't have to sit and look at my chart. It'll just alert me and then go about my business. All right. So, and that's because I don't see a setup right now of what's going on. So I'm just going to have to wait. All right. So that's me marking up S&P right now, waiting for breakouts. And I'm waiting for a breakout to go up. That's what I'm looking for because I want it to go back up because I'm bullish overall. Okay. So hopefully that helps with you guys. Yes, Golden. Hey, Raj. Gold has got to be heavy. Yes. Oh, Raj, you're so funny. I love it, love it, love it. Okay. If it could be talked about on this call, how did my challenge with buoy trade go? Oh, my challenge with buoy trade. I actually, go figure, at the time, I don't know if you guys heard, buoy trade changed the way they were handling their challenges. So, the way I was in it, I was positive at the end of it. I didn't hit goal. I was positive, but they changed the way their challenges went. So I didn't go with it again. It was like new rules, new leverage and all that mess. So I didn't stop. They weren't bad, but they also no longer were affiliated with FTMO because the whole point was to go through them to get the FTMO count a little easier. And so it didn't, since they changed it right in like the middle of it or something like that, July, I just stopped because they were no longer affiliated. So that's why I didn't roll with them. But I am going to be rolling with Nate on the Manifest Challenge. I mean, I ain't going to say no to no money. And if Nate over here putting out signals, you know, and for everybody so we can run it up to 2 million, I'm taking that. Like, No question. So hopefully y'all will join us on that. Appreciate the question. All right, yes, be pushing up. I like that. Come on, push up. And I like it that it's pushing up off of this 200. All right, EMA. So again, the pullback is the pullback. It's whatever. I don't care. It's bullish to me. I'm just looking for a valid bullish formation to hop into the trade. That's all I'm looking at. And most likely, I'm waiting for breakouts. All right, especially since it's 5 a.m. and this candle ain't got a lot of movement. You know, it could just be acting like it want to turn around and drop on me. So I just need to know breakouts. Breakouts is going to be easier for me to hop in. Okay. So awesome question about buoy trade though. I wouldn't knock them though if you guys are interested in looking at them. I mean, they're just another prop firm. They just changed the way they do stuff and they no longer are linked with FTMO. All right, so I'm gonna leave it on the M5. Even though the M5 is on a downtrend, I'm gonna just leave it there because we real close to this AIRO MA. And it might push up, but you got this 200 right here. So just be wary. I'm being wary. I could hop into the trade on a buy once it pushes up, but see that 200 is in my way. I could add like a form of resistance. So not that the AIRO MA can't either, which is why sometimes you see rejections off of it because it could be its own form of support and resistance as well. So when it breaks above it, that's awesome. You got momentum. You probably get an AIRO alert, but then it might stop right there. And then you being like, oh, here we go. And from where it is right now to here, it's only 20 pips. So I would wait. I need to have momentum because it could very well turn around and drop back down. So that's why I'm going to leave it on the M5 though. M1 is okay for price action, but I mean, M1 is just showing me I got zones in my way, which I'm already aware of. But here's a 200 right here, and spread is actually the same. It doesn't matter. Spread doesn't really matter to me, but we pushing up, and there's a 200 right here. It's like right in the zone. And if it closes above that, you still got some good momentum. The AIRO MA is turning up. That's really nice. But M1 can always change in either direction. So I prefer to just sit on M5, let M5 do the work and give me the notification. All right. So that's that. And NASDAQ is its own mother right now, so I'm not really feeling it. But same analysis I did on S&P, I'm applying it to NASDAQ because they both did the same thing. The drop, the move up with this move right here, same thing with the drop, and now it's turning bullish. That's great. Same thing, mark it up, and then I'm gonna go to the fib question. So hold on, I'm not ignoring you. Here we go. Let me change that. Let me mark it up. High, Asian, low, Asian, money zone, money zone. Here. Okay. Close to Asian, break. All right. Very close to it. We got the 200 sitting there. So if I get a break, it might be a real quick breakout and then it might stutter and then drop back down. So just wait and see. That's on the M15 though. So I would be on the M5 waiting for it. You see how NASDAQ came a push up, pushed above. We got a nice little impulse above AIRO MA and we're right at the 200. We might get a push up there. So, ooh, and a wick out. See? Not really feeling that. Might be able to get a break though. And then on the M5, again, we still on a downtrend. Okay, so we still got down pressure. But again, if you're looking on the H1 and the daily, I'm still bullish on indices. Still bullish. So we're going to see how that roll too. All right. So that's those two. And we just going to wait. And I already have my AIRO here. I got everything like on the H1 and everything. So I'm only taking H1 and H4 trades. If I can catch like a G-Chef or any of the GBP pairs on a breakout, on like Asian session breakout and stuff like that, I would, but I kind of went through them already and things did what they needed to do already from what I saw. All right. Nicole, EMA setting, I'm on the 200 EMA. Hey, darling. Oh, well, good morning, then. Well, welcome to my call. I know a lot today probably ain't the best day for trades, not from what I could see. But I'm glad you're here. What are the zigzag settings as well as my EMA settings? Oh, the zigzag is default, darling. So I use default. You're very welcome. And I love them that way. So because you brought up the zigzag, let me get to that question about top-down analysis and how I use the fib with everything. So I'm gonna give you a brand new chart, okay? Because I'm gonna clear it up. Throw AIRO on there. Excuse me. All right. Top-down analysis. Top-down analysis, you start from the higher time frame, you go down, and this is how I set up my charts so I can look for the fib. Now, mind you, I didn't do anything with the fib just yet on what I was quickly showing y'all on S&P. I was just mostly telling y'all about how to set up for the breakouts. Okay, S&P moves a little slower too, so that's why I like S&P more than Nasdaq. Nasdaq moves really fast and does a lot of wicks and you know, it's kind of hard to catch it. I prefer Nasdaq when it's on a run. You know, like what it was doing during Asian session last night. It was on a run. That's powerful, by the way. If you don't know, U.S. indices do move during Asian session. So, at that same run up of 100 pips on S&P last night, it was like double, if not more, on Nasdaq. So, if you want to see bounce, AIRO, go, you got in like right here, you got some spread, you might have some drawdown of about 26, 27 pips, and then boom, the run up, 400 pips. So it was like 4 times as much. Okay. So just so you know, so I don't sleep on Asian session either, you know, especially for US indices. It might be slow moving, but sometimes when you see something getting ready to pop off and they'll run up, they'll run up. Okay. So I just want to throw that out there too. But top-down analysis. So basically on the US indices, because that's what I trade, I usually start to the daily. I mean, there's no point necessarily me in going to the monthly or the weekly because we've been bullish like forever. Okay, so I'm not really normally I would be looking at top-down analysis to see when there's a point that an asset is going to hit like a zone and then try and catch a reversal. Ain't happening on those higher time frames because these things are all making all-time highs. You know, again, something catastrophic has to happen for it to drop like this. Okay, and what happened here? This is last year, y'all. This is COVID. When COVID started hitting and started getting more known and all that, that's what that is right there. Boom, drop. Something catastrophic to the economy makes you something drop like this. And when this is on a weekly chart, when it actually started hitting, you see how many points that is? How many pips that is? 11,000 pips on S&P? Unheard of. It don't do that. Catastrophic. Okay? That's on a weekly chart. So that's all I'm looking for. So I don't really pay attention to the monthly and weekly. I mean, I might glance at it, but it's not really nothing like big for me. But I do go look at the daily charts. Okay? So looking at the daily chart, the color trend formation, it's fine. I really don't pay attention to trend color on a daily chart as much. But what I'm looking for and what I want y'all to understand and look for and watch is when you're dealing with the indices and you're doing top-down analysis, understand that these things have been stair-stepping on their way up. Okay? And when I mean stair-stepping, look at these zones. Look at this right here. Stair-step. Look at this right here. Stair-step. Does that not look like the same exact movement? He had a nice little stair step here, not exact. Stair, up, fake out, then it went. Same thing, but I want you to pay attention. If you would have got in right here, look at these candlestick formations. This is the bearish one. This is the bullish one. This is the bearish one. This is the bullish one. Bearish, bullish. See how bullish didn't even overtake it in that next candle? And then what happened? It gave you that, faked you out, then it took off. But look at when it took off of a rejection off the zone And then the next candle is bullish engulfing, and then we're gone. All right, stair stepping. That's why I say I'm always bullish on these indices. Here go the last one, same thing. You even got an AIRO alert back then. All right, bearish candle, bullish candle. It took off. Okay, had a little bit of a stutter. It could have been like a new zone that appeared, and then it took off. All right, so pay attention to the overall trend, which is up. And then once you determine that, then you want to be like, okay, let's go down to where the time frames are that shows price action and stuff like that, so that way you can get into a trade. I prefer the H1 and I prefer the H4. All right, here is the thing. Let's throw our zigzag on here. So it's insert indicators, custom, zigzag. Just default settings. Change it whatever color you want, but I got mine just default. Drop it on there. All right. Zigzag is going to make it a little easier for you, those of y'all who don't really know how to draw your fibs. Because I'm going to just tell you, if I've seen this, I would have drew my fib using Fibonacci retracement right here. Click on the button. I would have drawn my fib from this low right here to that high. I would have just drew it for the entire move. Okay, just off of looking off the H4. Then I would have saw we had to drop down, came here to the 50% line with a rejection, came next 4-hour candle, turned bullish, went up, right? And now it's coming back down again and possibly rejecting. So this is the brand, this new 4-hour candle is this is going to close in half an hour. The new H4 candle is going to open. And what you want to do is you zoom in. See how that H4 candle is bearish engulfing? So the 6 o'clock candle is going to help me determine what I think S&P is going to do for the rest of the day. The 6 o'clock candle is going to be 4 hours, and it's going to be from 6 to 10. So it's going to encompass market open. So that's why I'm very wary on taking trades right now on S&P, because of the way this movement is. This stop right here of bullish movement is making me wary. Okay, so it makes me wary as to why I'm not jumping into trades just yet. I need to see what I feel like it needs to do. And the fact that this current H4 candle is turning bearish engulfing is leading me to believe the next 4-hour candle is going to also be bearish. It may start off bearish and then continue to drop and maybe wick out and push up. Or it could push up, and then as it gets closer to market open, it'll turn around and drop. Okay, I've seen that happen. That's why I'm going through this. So that's why I'm just saying be cautious and wait. I could wait all day for a trade. I just need to make sure I have a nice setup and I'm comfortable with it. All right, so I would have drew my fib just like that off the top. But if you zoom out, if you want to just draw your fib according to what the zigzag line is showing you, you can do that. Same thing, Fibonacci retracement. Start from the low of the zag line to the high. All right, so this is one move. All right, and then you see the zag line drop. That tells you how far back it dropped. So it dropped to 23.6 fib level. Okay, if you look at it right here, you see how this candle, this H4 candle closed below this 23.6, right? It closed below it, but it did not go to 38.2. It hasn't gone. I'm wary of that, because normally that would be a fib level breakout and it should go to 38.2. It didn't. It had an interruption and it turned around at an impulse candle and went up, but then stuttered and now dropped again. Now it got there to 38.2. You know, so that, to me, looking at that, that would also make me wary. Okay, but that's one way to drop it. It goes to 23.6. It didn't go any further, and then it pushed up and went to 0. Normally goes back to 0. It's supposed to restart its trend, but it didn't. It stuttered. So those things is why I am cautious. Okay, but that's how you can draw your fib. using your zag line. So now let's go to the current zag line. It went up again. If you're only drawing it for the uptrend, you start from the low to the high. See this zag line here, just these two candles? It's not even really a movement as far as I'm concerned. So that's why it's really short, and that's why I feel like this isn't really valid. But you see how it draws back and it completely retraces, right? It completely retraces. And so technically, when it's retraced like that, you would think it's a new trend that's going to start. It's going to stop going up and it should be going back down. Okay. It pushed up. And then what is it doing? It's dropping back down again. Okay. So one way to kind of look at that is maybe it's no longer going up. You can now flip your fib. So now you start from the top to the bottom to mark it for the downtrend now. Okay. You can do it. Doesn't matter what the trend of the time frame is that you're drawing. You typically want to stick with the overall trend, which will be up. But when you start seeing retracements and pullbacks, especially when one completely goes past 100 and then decides to pull back, you might want to be a little bit more cautious and wary to see if it might be changing trend temporarily. Temporarily. All right. So again, drop. And now look at it push back. All right. Once it pushed back, this bullish candle closed above this 38.2. I would have been expecting it to go to the 50, which it did already in that same candle. So now I can't wait for no fib level breakout. I need to have a candle close above this 50 line, which it did. And I would actually be expecting it to go to 61.8 off of this downtrend, right? That's why I was thinking that the bullish momentum was going to keep going. However, look at the current candle, it's dropping. So it could wick out. And if it does, that's fine. Because remember, overall, I'm trying to be bullish. It could wick out. And if it does, that's great. Hop in the trade. I'm looking for it to at least go to 61.8. Going up. So I'm looking for bullish movement to go back up. This is off the H4, by the way. All right. So that's me doing top-down analysis on S&P utilizing the fib and zigzag. Now, I'm only down to the H4. The H4 gives me an overall what I'm looking for. Remember, I've said a 6 o'clock candle is going to be more important to me now. Okay? More important. Remember, I still marked off potential breakout zones too. Okay? So, looking real bearish to me, and you might break below Asian low, then we got some good amount of space to the low of the day. All right. That's off the H4. Now, I trade off of the H1 normally when I do my setups. Okay. Same thought process. All right. Here we go. That same downward movement that occurred, and here's the upward movement. All right. You're going to mark it for up. I'm going to show y'all something here. This downward movement that happened, fib, top, down, using the zigzag line. Okay. This is not the candle you measure. You start your retracement pullback from here. H1. We got this candle. Okay. When this candle closed, it closed with a rejection off of a zone. And then it closed here. Okay. When it closed here, it was, this is what I'm trying to show y'all. This right here, bullish candle closed here. It would be going to the 38.2. Closed above 23.6. Going to go to 38.2. Did it do it? Yes, it did. Right here. Okay. When it does that, that's a fib level breakout that I'm looking for. That is the upward momentum that I was looking for to get back going up. So it did. Went to the 38.2 and then some. So this is that move. You would have got in right here, ran it up 100 pips. Okay. TP1 could have been the fib level, or you could have held it and just see how far it would go, because sometimes it doesn't go to the next one. Now, because it closed up here, I would have expected for it to do what? Continue up and go to the 61.8, but it didn't. It pulled back, dropped down. So those that right there towards the end of the day, by the way, I was thinking, oh, okay, maybe you're just going to pull back because it's in the day, and then you're going to restart it and go back up again, which it did, but then it stuttered right here. Rejection, rejection, rejection. This is like a whole nother little zone that just formed, right? And then what to do is dropping now. Okay, so that's one way that you catch a trade going back up. That's what I'm going to do, actually. Draw it off of a down zag line and then try and catch a fib level breakout going up again. Because I'm still overall bullish, but it already made a new all-time high. So of course it's going to pull back to kind of reset itself, and it might push back up to form what? A whole new all-time high. Or we could be just dropping down for things to collect some money somewhere on some order block or whatever. But that's how I use the H1. All right. Fib level breakout, try and catch a bullish, then you got to pull back. So now what you can do, and remember, this whole entire call is recorded, so you guys can go watch this call over and over again. Fib level retracement tool. Here's the bottom of that zag line. Here's the end of the upward movement. Right? Rejection, rejection, and we drop. Check it out. Here we go right here. This candle, drop candle, it closed what? Below 23.6, but did not touch 38.2 yet. So what was I expect? I would expect for it to what? Drop. And it still has not hit 38.2 yet. Okay? So I would be expecting for it to continue bearish. Okay? Because remember, current H4 candle is a bearish engulfing candle. So when 6 o'clock comes, I would expect it to continue bearish, even for me to go to the next fib level. Okay, so I would be looking for a potential sell to get in. Okay, and with that being said, go look at the M5. If I have bearish momentum, which another M5 downward arrow might come, that would help me see the push. See how this right here tells you it hasn't gone down there yet? This might help me with the push, but we got all these kind of rejections happening. I'm not seeing full candles down. So that's how I would look at that. But that's what I look for when I'm trying to catch retracements. But again, I'm still overall bullish. So any sell that I take, I wouldn't necessarily just take it off of a fib level breakout. Something else got to look good for me. Like, we're under the arrow MA, that's great. But what is the candlestick formations on the lower time frames looking like? It's all better for me because I'm in a resistance zone right here on the M30. Okay, we might be looking for that sell. Bounce off the resistance zone. Same thing off the M15. Bounce off of a resistance zone. So this M5 might have a resistance zone pop up, which would signify all the better for me to catch a sell maybe to the next fib level. But notice that you'll have this M5 support zone in your way. So instead of it thinking it's going to break that fib level 38.2 and maybe go down lower, you're going to have the support zone that's going to stall. Okay? That's going to stall a little bit. But I got an alert right here. So if it wants to keep dropping and it breaks, that's a breakout that's going to happen. Okay? All of these things that I'm looking at to be able to try and catch a trade. But that's top-down analysis utilizing fib and zigzag. So here's all my fib levels. I have the positive side and I have the negative side. 11.5 is a new fib level that I'm using because someone gave it to me, and I'm trying to see if it's going to be something that I could use as part of my fib level breakouts a lot sooner. Okay. But the fib levels I'm really looking for is 71, 78.8, and 88.6. Those are discount fib levels. When price gets down there, when the market gets pushed down there, whether it's on an uptrend or downtrend, it doesn't matter. Whichever way you draw your fib, those are the 3 fib levels I would look for to take trades going back in the direction of your trend. Let me restate that. I'm on an uptrend on S&P. Off the H1, H4, it doesn't matter. I'm on an uptrend. I'm looking for bullish, a way to get into a buy. I drew my fib for this zag line that's going up. It is now pulling back. If you want to wait for it to finish pulling back and then look for your buys to get in, I would prefer a buy off of one of these 3 fib levels, 71, 78.8, and 88.6. And if you look at it, you'll see 71 is sitting right on what was created as a support zone. That is an additional confluence for you and me to determine that that would be an awesome buy when it gets there. Most of the time, I could care less about it retracing. I care more about catching it and following trend. I'm not the best counter trend trader. The fib level breakout is just a way for me to catch counter trend trades safely, but I much rather prefer to trade with the trend. So if overall we're going bullish, I'm looking for ways to get into the buy. And if this thing decides to pull down to the 71, which is look great, I'm going to wait for the buy and wait for a candlestick formation, a railroad, a doji, a rejection, long shadow. This is one of the best looking rejection candlesticks you can find. I love those. Love it, love it, love it. Anything like a rejection off of there, bullish engulfing, anything like that can candlestick formation. And heck, it might even be to our benefit. We might get an AIRO alert. I doubt it because the AIRO MA is way up here. So having it come down and then turning around and go bullish, that would be one way for you to get into the trade before the H1 AIRO alert. And then when the H1 AIRO alert comes, I would just take additional position and ride it all the way back up. And where am I riding it back up to? Riding it back up to 0. Because remember, this is following trend. All the Fibonacci does is just help you measure trend. And I know we got 15 minutes left, and I'm going to answer those questions when I'm done. All you're doing is following trend. And when you're following trend, in order for it to continue, what does it need to do? It needs to go back to 0 anyway, and then continue up. And this is powerful because 0, I have an alert set on that, and I didn't even realize it. 0 is an alert. It's a high of Asian session today. So if it decides to pull all the way down and then bounce off of there and shoot up, I have it already marked and be like, oh, that's another breakout from a previous day's high of a different session. Another confluence of a breakout in your favor. Okay? Marking up your charts for previous day highs of different sessions is powerful. Money zone, powerful. Overall day high, powerful. Because when price breaks or comes to those levels, you got momentum. Okay? So that's how I use the fib and how I'm trading, and I typically go on the H1. I really don't go on lower time frames with the fib because I'm looking at overall. All right, now I done said all that. Oh, I gave you positive numbers. I'm sorry, Julian, but yeah, you can do the same thing, just add a negative in front of them. But you don't necessarily need the negative numbers. However, they are helpful as potential targets. And this is why when I say targets, I mean take profit targets. For instance, I drew the uptrend and it's pulled back to at least 23.6 right now. right? Normally, when price pulls back somewhere and wants to restart its trend, it'll go to the negative of where it retraced to. That's something that Nate teaches on the Strat 8 video. All right. So it's pulled back to 23.6. It more than likely will go to negative 23.6 as a potential take profit. So normally I'm always going back to zero, but then I can have additional TPs to tell me where it's going to potentially go. Now, granted, it will be in my favor anyway because I'm typically going to the zone. Now, but later on, if price wants to continue to drop, this actually might be a new zone created. So just to be on the safe, just something to understand. So if a zone does get created, I'll just say it like this. I'm going to draw it for you. If it happens to look like this later on in the day, right? There's a zone, there will be now a zone there. And price normally is supposed to come back to zero. So zero would be in that zone. Okay. But as far as it has pulled back, so let's just say this, which now that I'm looking at it, it might actually play out this way. There'll probably be a zone created. It's going to pull back. And let's say it comes back and pulls down to the 71, right? Wick off and you're going to look for the buy. TP1 would always be zero for me, but TP2 will be the negative 71, which is where? Right at this higher zone, which would be the original intention from the move in the first place. From this move, when that zag line dropped and it started going up and it interrupted, this was the original zone I was going to go to anyway. So that would be additional confluence for me to be more confident to hold a trade to go to 71. Now, of course, I'm taking partial profits when I hit zero. You know, you can't go broke taking profits, but that's how I use the negatives. The other thing with that, I'm going to tell y'all, let me get rid of that, is expansion tool. All right. So Fibonacci expansion tool, you go to insert, Fibonacci. See, this whole time we've been talking, price has been playing around in that same area. That's why I wasn't messing with it. Fibonacci expansion. All right. With the expansion tool, you can also use this to help with set take profits as well. So for instance, for upward movement, you can use your zags line. You start from the bottom, go to the top. All right. And then you got this third line here. Double click on it to bring it so you can drag it. And you would drag your third line to the lowest point that price drops. So it's when you're already in a trade going back up. You would drag it down to however far back it retraced. And then these fib lines are now potential take profits. And I actually always look for 61.8 and the 100 as potential take profits. So 61.8 was right here. I'm going to show y'all where it correlates to. All right. 61.8 is right there. And then here's 100 right here. Okay. I'm going to show y'all how that correlates. Go back to my fib retracement. All right. See, look at that. 61.8 was at that negative 23.6, which if there's a rejection right now and wants to go back up, it would be the inverse of this 23.6, where it rejected the fib level. It doesn't go to 38.2 unless it touches it. See how that correlates? And then if it decided to actually go back down to like the 71, it's like a little bit, that 100 is a little bit above the 61.8, almost to the 71. Okay, so fib expansion is awesome too. So that's something just to look at to help you set take profits when you're utilizing fib. And by the way, I'm talking about take profits and stuff like that, but stop loss is just as important too. So when I'm on my fib going back up and I'll get into a trade, let's say I get in at the 71 right here. Okay. If I'm getting at the 71 and there's a rejection off of 71, my stop loss is the next fib level down, possibly 2. So here we go. Right here, If I get in at the 71, right? My stop loss can be 78.8, a real nice tight one, which is about 26 pips, or 88.6, which is a little bit more moderate stop loss, and it's 64 pips. Okay, that's what I would be looking for. Anything back to this 100%, then it's just going to keep going down. But if you're going to try and get into a buy here and you got your rejection and you're like, oh, bet I'm in, next fib level is your stop loss. 64 pips, you know, it's a big stop loss, but it ain't that big, especially off of the H1 on S&P. 100 pips or higher, yeah. But you can also go down to the 100 so that if it does get there, it might be a complete retracement. But I can tell you, I've seen price come down to 88.6, reject, and then go all the way back up. Because why? It's a discount fib level. They bring in price down to buy it at a discount and then take it back up where they want to go. So went over everything on fib. So let me go to the Q&A. Let's see. Hey, Ada. Let's see. Can I suggest any sources to study more deeply indices and understand the difference between NAS and S&P, also from an economical point of view? You know what? I'm not sure. I'll have to look that up, Ada, and hopefully I pronounced your name right. I apologize. I saw AIDA, and I said Ada, or is it IATA? I'm so sorry. Let me know. You can actually tag me in the AIRO bag chat, and that might help. Lucretia, you don't see recording in the corner? It should be. No, it's still recording. It's still recording. Okay, I answered y'all questions on the negative and on the fib. So cool. Hopefully that helped you guys. But I will look for information to help you guys on indices. Everything I learned about indices was just because I was trading it and I watched how price was moving, and just, from hearsay. I mean, I was introduced to S&P through Nate, so I never traded indices until I got AIRO. And I was on the AIRO beta team, testing out the indicator. And when Nate dropped the strategies, he was like, yeah, you could throw it on S&P. And I was like, wow, my whole world was opened because of that. See, look at it. We are now dropping. See, this is why. This is why I waited. This is why I waited. It is dropping, and I'm anticipating a 38.2. I'm anticipating that. And that's 20 pips from now. It's okay. I'm not tripping off of 20 pips. But once it breaks there, I might be looking at more pips just to ride it down. So I'll ignore the 20 pips in order to make 100. You know what I'm saying? But yeah, I'll look and see. But what I will say is that I've been trading S&P since last August. So, oh my goodness, I've been on AIRO for a year now. And by the way, this AIRO is not like what was given to us when we first started. Just saying. But shout out to Nate because he put in some work on this thing. But what I wanted to tell y'all is that with S&P and the three indices, you'll see that they move differently. I mean, you can look at a chart. You can look at a chart and see, not from a daily perspective, because you'll just see up, but what you want to look at is on the H1, on the M15. When you're on the smaller time frames, that's price action. So that's showing you how things are moved. They may move similarly, but one is more aggressive than the other. And you'll see that when you're looking at a chart and watching. And sometimes it might just be to your benefit to just sit at a chart and just look. Like, you could take off the scroll. It's 6 o'clock, so I'm about to get off. You could just take the scroll and kind of just scroll back and just kind of look. Watch the charts, look at movement. You'll see when you see consolidation. Look at that. Like a nice big old box happened that day. And then what did it do? Breakout. You'll see that on this lower time frames, and just kind of just scroll back. One thing about the zigzag is you can see W formations and M formations. This was a W, of course, but I don't like this W only because this leg is lower than here. Usually I would prefer those to be higher, but it is what it is. But that's one thing. I'll definitely, if I can find something, I'll post it in there for you, darling. Do I trade UK 100? Not yet. FTSC, not yet, but I am going to, because it, yeah, I don't normally trade it because I have this sense that if it's a European index, it will move more during the European session. During when German opens, which is the European session, and then when London opens. I think there's an hour gap between those two openings. You guys will understand that more when you get sessions. The main sessions are London, New York, and Asian, which is really when Tokyo opens, right? But there are other sessions that start an hour in between those three big ones. So there's a European session that starts at least an hour earlier than London open. And then there is an Australian open, which is about an hour before Tokyo. Okay. So what I'm saying with that about sessions and indices is UK 100, since it's a London, it's the FTSE London index, I would think that it moves more during London session, but I'm not up for it. So that's why I don't necessarily trade it, because I like to be up to see movement in case something happens that I can get out. So that's why. And that's why I don't trade German 30 either, because I'm not up for when it normally would move. Even though they follow US indices from what I'm hearing, I would prefer to actually see it myself and trade it when it actually moves and when news happens for it and all that stuff. So that's the only reason why. That's my personal preference. Okay, bet. Y'all got it. Y'all got it. Yeah, I would expect they all move. It's just got to get used to them. But I would definitely take a look at that. And then, oh, thank you, Ada. I appreciate it. All right, you guys. Well, I don't see, he flipped the fib. Y'all crazy. All right, you guys. Morning, Beatrice, by the way. So it's 6 o'clock at 6:03. I'm gonna get ready to get off because I gotta go deal with my kiddos. But I'm gonna leave you guys with a couple of things here. Not this. This. Remember? Ooh, that drop. Look at that support zone that just appeared, right? Remember, I got it marked off for a breakout, potential breakout to happen. It still has not even gotten to that 38.2, which is what I was waiting for. Here we go. Draw that again. Okay. So Asian high, Asian low, money zone, money zone. Okay. Price is now under the 200 EMA. Let's zoom in so you can see what I'm talking about. I got this, the 5 o'clock candle closed below it. So price is under the 200. I would be anticipating for it to continue to drop and at least touch this 38.2, which is about 20 pips away. All right. Even though it might push up and then drop down. See, we only been in there 4 minutes. It already created a wick. Okay. It might push down to drop and hit that. And then it may keep going. If it keeps going, we got Asian low right here marked off. And if it breaks that, you got a lot of momentum in your favor to continue to drop. And I will be looking for it to come down to the support zone. Okay. That's what I'm looking for. But for it to get there, okay, it got to bust through a couple of things. It got to bust through this zone. So, and then you see that when you zoom out. Look at where it got to go through all of that to get there. And it just might. But as you can see on the M1, it started turning bullish. It started forming these zones and turning bullish. And here's the M5. So the M5 got about 2 zones to break to get there. Okay. I don't know if it's going to happen now. I have seen movement happen in the 7 o'clock hour and the 8 o'clock hour before market open. So if it does that, and you guys keep an eye out on it, wait for the breaks, wait for the sell. And if you want to catch the sell, and then wait for market open at 9:30 when Dante gets on and look to see if it actually will continue to drop. If it continues to drop, it'll have the momentum of market open, and it'll probably keep going down to where I'm looking for, which is down around here somewhere. All right, to catch a buy. So if you guys catch it for the sell, that's one thing to look for. I'm going to be looking more for it to break out. So I'm going to kind of look for it to break Asian session. That's kind of what I'm waiting for. I know I got my fib on here, and I'm thinking it's going to come to 38.2. It is dropping now, and it probably will touch that, but I'm kind of wondering, is it going to just wick out and turn up, or is it going to continue? If it continues, then this zone is gone if it breaks this Asian, and then I'm all the way in. Okay, that's the sell. That's what I'm looking for the sell, which is still trading the retracement of the pullback here. Okay, that's all I'm doing. And also what I'm looking for is catching a sell, waiting for the breakouts. This breakout, I'm going to say this too. The fib level breakout is according to the time frame. So if you draw the fib on the H1, the fib level breakouts are for the H1 only. So you're looking for H1 candles breakout. I've tried it going down to a lower time frame, thinking, oh, M5, it broke. We're good. I'm going to hop in. No, that's not how it works unless you're drawing the fib for the M5, because these levels are based off the H1. So you wait for candle closure of fib levels off the H1 to get in. Okay. And then, like right now, seeing how we'll be in between, I can catch a sell on a lower time frame to ride it to the next fib level. That's how I would do it. Okay. So I'm going to leave that with you guys, because right now it doesn't really know what it wants to do. But if it goes for sales, that's what I'm looking at for sales. For buys, it's just restarting the trend. So again, I ain't got no zone here. Going to the next zone, you know. So that's what I'm looking for. And that's on S&P. And the same similar situation I will look for on NASDAQ as well, and on US 30. Okay. And then Ada, I'll make sure I'll see if I can find some stuff for you guys on the indices. But that is it. I'm just going to look in the chat. Yes, time zones is different. Cool. Yeah, and on your broker, they probably open at the same time. You guys are funny. With your little French rivalries. All right, you guys, thank you so much for joining me on the call. I know I went over a little bit, but I was feeling myself. And I'm sorry we didn't get a chance to really take a trade, but hopefully the information that I shared with you guys helped, and you got your call about fibs. I know. And hopefully I didn't bore you guys with fibs, but that's how I trade. And it's I don't trade without them. You know, now that I shout out to Al from Hawkeye for teaching me fib. He taught me fib expansion, by the way. So, and then I went and researched Google University and baby pips and started learning more about fibs and just how to draw it. I figured out about using your zag line, zigzag, to help you draw fibs if you're not used to them. But I can just tell you, as I'm on it, I was drawing them without that zigzag, and I can just draw a fib on a chart. I'll just throw AIRO on so you can see what I'm talking about. And I'll draw a fib on a chart, and I'll just draw for the movement, naked chart. For the movement. It just so happens for the movement that it actually coincides with a zag line. You know, so it's just a different additional confluence, but that's how I would draw. I just look for the movement, draw the movement, same thing. Now, interesting. Yeah, that's that push up right here. See how it pushed up? And now it's like for that entire move, and then it kind of came out, wicked out, and now it's dropping. So it's interesting when you see it, but that's how I normally draw fibs. But anyway, all right, you guys. Well, and I could not see that. I'm sorry, I didn't even share my screen. My bad, you guys. I need to go take a nap. But thank you guys for joining me. I will chat with you guys tomorrow. Hopefully the market will do something so we could take into it. Yes, I totally need some tea. And I might do binary. So that's the other thing. If we can get an alert I can show you guys how I would take it in Nadex. And remember, the same trades, I posted it. The same trades I take in Forex, I take in futures and in Nadex. Okay, so the same process of utilizing the fib works in every market. So if you get those fibs right, remember, by the way, fibs is an institutional trading technique, by the way. Okay, utilizing indicators and stuff like that, that's fine. But it's more for retail trading. But I'm in a mentorship right now, and my mentor is an institutional trader. And fib is an institutional trading technique because when you're drawing the trends of how prices move in naked chart, you're following what they're doing. Okay. And when you see those discount levels and things like that, that's exactly what they're doing. You just happen to learn it. Master the fib, and you can master trading any market. Throw that on an Apple stock chart, and you'll see when to get in and buy. And then on futures, what I'm using is I'm getting ready to actually go through a challenge for futures to get a funded account on futures, because there are funded accounts for futures. There's funded accounts for Forex, there's funded for futures, and there's funded accounts for stocks if you want to trade them, right? And I can show you guys that. But for futures, I'm actually going to be going through 3 different challenges. One is from Lilu Trading, one is from Top Step, and the other one is from Earn to Trade. I just got to figure out which one I want to do first. And so I'm utilizing their platforms to trade on. But for futures trading, I'm using AIRO. So I can throw really quickly. I'll show you guys this real quick, and then I gotta go. Here's S&P, right? And then actually, let me do this. I'm going to show y'all trading view as well. So this is one way to do it. If you don't have a broker that gives you futures prices, you can always go to trading view, right? So if you go to trading view, I know you guys can't see it just yet. Hold on, I'm bringing up trading view so you guys will be able to see what I'm talking about, so you can go ahead and practice this yourself too. And prepare yourselves, because I mean, trying to get this money out this market, right? Catch it in all different ways. Trading view, new share. All right, so really quickly. All right, wait a minute, get off of that, Jackie. All right, so I'm going to show this to you. See how price, this is S&P, okay? Price is right here. You see this? 4442.7. All right, on AIRO on your regular MT4 Forex broker. Okay, all right, so 442, let's just round it there. Now on trading view, okay, on trading view, you can go to a chart. I'm going to pick S&P, of course. So SP 500, come on, type in there. Oh, excuse me. CFD is what you want to do if you're in Forex, but I'm in futures. So if you want to look at futures, it's E-mini S&P 500. All right, CME. And then you look, and you're going to want to pick I'm trading the current September contract. This is a real quick thing. I'm just going to show you all real quick. Launch chart. Here, it's launching. All right, real quick. And then I'll let you guys go. All right. Yeah, I had it on like double charts. I forgot. Oh, that's because this is S&P on CFD, which is what your normal Forex brokers would do. So yes, you can see this in Forex. Global Prime is who I use, because that was actually the broker that Buoy Trade uses, and it was as close as I could get to any of the other Forex brokers like Envy in TradingView without it being Envy. Okay, so 442.6 should be the same as what you see on S&P in Forex right now, and it's close, 442.8 and all that. All right, but here's your futures. All right, and see, yeah, there is a price difference. All right, but look at the chart. What's the difference on the chart? And the highlighted line is the same chart, is the same candlestick. So look at the chart. It's the same. Okay, it's the same. It might be different based on broker, maybe a candle that's bullish like this one is bearish on the other one, but the candlesticks are pretty much the same. The movement anyway. So when you get an up arrow alert, which is what I do on H1 on S&P, I will take it in Forex and I take that same trade in futures and run it up. And when I get out of it in Forex, I get out of it in futures. Normally on futures, I'm running it, I take about 100 pips and I dip normally because I'm only trading it for like once a week, pretty much. I take like one trade a week. I normally do anyway in Forex. But in futures, I tend to make a little bit more. And so 100 pips in futures is about $500 in one contract. And then basically just use the brokers, the funding accounts to run it up that way. But that's how you would do it. Same exact thing. So I'm using AIRO to trade that. And in that same H1 AIRO alert, I will take a Nadex. So the next time I do another session with you guys, I will show, yeah, that was the paid version of TradingView. Yeah, so definitely will you be running your calls in Zoom? Tomorrow, I got to test out AP Live today. So I will let you guys know that that I am going to, whether or not I'm going to be on Zoom. I should be on AP Live, but I will double check and make sure today testing it out. But yeah, that's definitely a paid version of TradingView. And then, oh, by the way, I need y'all to, I'm just going to say this to you too, and then I really got to go. So I love you guys, but I want to show you guys one more thing. So yeah, this is the paid version of TradingView, but I want y'all to peep all these different time frames that you can get in TradingView that you cannot get in MT4. And I'm gonna tell you, in TradingView, my new favorites is 15-second time frame, 30-second time frame, 3 minutes. Those are my new favorites. And I love the 2-hour time frame. Okay, so I'm trying to get better in my trading too. I'm always a student and I'm always doing better. But I tell you, when I got on the TradingView and I was introduced to all these different time frames and what you see, I mean, look at this daily chart. Let's go at it 2 days. Let's look at a 2-day daily chart. Look at these wicks that you see. You see that? Come on. What did I tell y'all when you see these wicks? Right? You pay attention to the wicks. Okay? But look at when a wick comes out of nowhere. What did I tell you about this candlestick formation? Didn't I tell you I like these dragonflies? Or a long shadow, whatever you want to call it. I love them. When you see it, that's a rejection. It's go time. Man, you see that push? Look at this one. Same thing. You see the push? Come on, y'all. I used to not even like TradingView because it was like difficult, but I'm getting used to it. And boy, when you start running through time frames and you looking at these candlestick formations and you start like, this is the monthly chart. Let's go on 2 months. Let's go on 2 weeks per candle. You know what I'm saying? You start seeing things a lot different on the higher time frames than you normally would. But I'm telling you, them wicks don't lie. Wicks don't lie. But definitely give it a shot. Give it a shot and let TradingView expand your mind. That's not to mean that you can't trade on MT4. You can still take your trade just based off of marketing up on TradingView, which a lot of other people do. So, okay, now I'm done. I ain't gonna talk no more. I know, right? Y'all, I love you guys. Y'all take care. I will talk to y'all soon. Catch y'all tomorrow. And one of my grandkids is not feeling well. So if I don't do the call tomorrow, I will let you know. But I feel like this time will be safe. All right, you guys, take care. Be safe. Love you guys. Catch you tomorrow. Bye.